Hi, good afternoon, Tom Sheeran, once again with Maritza Chiaway from Prosperity Mortgage. We're going to do another forbearance update just because it seems to be constantly changing, and a few new things have kind of come out, or new parameters on what's required if someone does go into forbearance. And Maritza, what can you tell us about that?
So thank you, Tom, for having me. There has been a lot of confusion about forbearance. Up until May 26th, we have very clear that if we go into forbearance agreement because we lost our job or why not, our credit score was not going to be impacted, okay? And that's so true. However, the confusion comes when it comes to the eligibility to either refinance your home or buy another one, okay? So if you have accepted the forbearance agreement, we have to wait that you made 3 payments on that agreement to be eligible to buy another home or refinance your current home, okay? Now, this is applicable to conventional loans. It doesn't apply to FHA. It doesn't apply to VA loans, and it doesn't apply to jumbo loans, okay? Jumbo loans tend to be a little different, so I would advise if someone has a jumbo loan and has gone into forbearance agreement with their lender, to talk to them and work with them as far as their eligibility to buy or refinance their home.
And then what's the practice are you seeing with like an FHA, for instance? What are they requiring now if somebody has taken the forbearance?
There's no requirement as far as refinancing or buying another home. If you have an FHA or a VA, those are the only 2 exceptions. The other exception that I'm going to get into is that if you listed your house for sale and you were already in a forbearance agreement with your lender, okay, that doesn't mean that you can buy another home, because that when you sell your home, that loan will be already paid off.
Mm-hmm.
So there's no requirements to the 3 payments. Your credit score will still be the same. It's not going to be affected, and the 3 monthly repayment is not going to be required because that loan is going to be already paid off when you sell your home.
So to recap, the conventional product, you have to make 3 consecutive payments after forbearance, and then again you can be eligible to do another loan if you so desire.
Correct, if you so desire, and that's for Fannie and Freddie. In other words, for a conventional loan. Now, it applies not only to your primary residence, it applies to all the residents and all the mortgages that you have. So if you have a second home or a couple of investment properties, you have to have the 3 payment history on all those properties to be able to refinance or buy another home, okay? Also, this doesn't apply for those folks that were already approved for forbearance, but let's say their employer called them back and before they were expecting it, and they didn't have to go into forbearance. Okay, so you don't have to make the 3 payments. So you never took the forbearance agreement. You still be eligible to refinance or buy another home.
So if you didn't practice the forbearance, and again, I think we talked about it before, it's essentially not going to affect your credit rating, but it's going to be notated on your report, right? That what's the term again? They're going to call it, Maritza.
Yeah, actually going to use the word forbearance.
Yes, okay.
In your credit report. So if you go to a lender and you're under a forbearance agreement, you want to refinance your home, that lender is going to make sure that first of all, you've made the 3 payments, because he or she is going to see on your credit report that you've been under forbearance. And if it still shows on your credit report, but you never took the forbearance agreement, you need to make sure that you have proof that you made your full payments on time during the last 12 months to be able to refinance or buy another home.
And I just saw this too. I guess if somebody wants to do a refi and they've done a forbearance, depending on the type of loan, again, that would still, if it's a conventional loan, they would have to wait after 3 payments to be eligible for a refi, correct?
That is correct. And a lot of confusion comes on that point, Tom, where let's say not the 3 months have gone by, only 1 month, and you still want to refinance at that time, then you can think, well, gee, if I make the 2 payments right away, I can still be eligible now. You have to make the 3 consecutive payments. In other words, you have to wait 90 days to be eligible to refinance or buy another home.
Yeah, and that's important. We had talked about that they're not allowing a lump sum payment just because most of these people took forbearance. It's employment related, and they want to make sure you can make those 3 payments and then the 4th one and beyond that too. So again, it's putting a little skin in the game, and you're not easily out of it. You've got to show that you're responsible and you can make the responsible payments. What about other debts like car, student loans? How's forbearance going to affect that?
It doesn't apply. This forbearance guidelines are just for mortgages, okay? It doesn't include any credit cards, student loans, or any type of installment loan, basically car loans, or any other personal loans that you currently have. It's only for mortgage payments.
Yeah, and then going back again, if an investor has gotten to a little trouble and they did the forbearance on several properties, they've got to practice the 3-month rule, again, depending on if it's a conventional loan. If they've got 5 properties they did a forbearance on, they've got to do the 3 months consecutive on all 5 products if they're conventional, and then get caught up and then see what the eligibility is.
Right. If we are in the investor profile and I have 5 investment properties and I went into forbearance for the 5 of them, then I would need to have 3 payments, consecutive ones on each of the 5 properties to be eligible to buy or refinance. Another exception is jumbo. If you have a jumbo loan that is over $510,400, then you need to speak directly to your lender, because those are loans that are directly sold to the government agencies that are not conventional. So it's more of a case-to-case basis, and you need to talk to your lender about what it can be worked out for you.
Excellent. And again, going back to what we've been talking about from the very beginning when forbearance were offered, it's kind of only if you have to or an emergency situation to utilize this step. If you can make the payments, it's always better to do that, but it's there for us, kind of a safety net if needed, right?
That is correct. Rule of thumb is get into forbearance if you really need some help. You really need to reduce your monthly payment. Okay, your cash flow on your household has been affected because you're in furlough, or you've been part of a big layoff, and it definitely has some effect on the finances of your household. Then that's the correct reason to go into forbearance. you shouldn't go into forbearance because, oh yes, I'm going to sell my house. I'm just going to save all these payments because the house is going to be sold anyways. Okay, so of course there's no way to prove that. Your intentions are different than when the lender can read you, right? But I would suggest to only go into forbearance if the cash flow on your household has been negatively affected and you're having difficulty making those payments.
And again, the buyers who do practice forbearance got to realize that once they're caught up, they'll probably might be under a little more scrutiny, just because they have that notated on their credit that they had a forbearance. So the lenders want to make sure their employment's stable and the income and the ability to pay the mortgage is all in good order.
Absolutely. A lender is going to look at your income with two different set of eyes to make sure that your income is back until, let's say, the 40-hour per week, and that you have the potential of having a stable income for the next 3 years. Okay, so yes, it's going to be underwritten like if it was a new loan. We're going to see obviously the effect of forbearance on your income during the past 3 months. We understand that, but we will have to see in documents that you're back into full employment to be eligible to refinance or buy a new home.
Yeah, so that's some new things that we're kind of shedding a little light on with the forbearance. Anything else, Maritza, in the forbearance arena that people need to know?
Well, if you have gone into forbearance, there's also, there's no credit score effect. We know that. We know that you had to make your 3-month payments. However, if you already made the 3-month payments, you have the minimum credit score eligibility to refinance. You also need to be aware that your equity might have been depleted a little bit, okay? So the terms of your refinance might not be the same as if you were not in forbearance, okay? Because once you're in forbearance, you typically could paying even below interest. You're not even paying interest. You could be paying just the minimum payment to maintain the loan, okay? And all that balance that you haven't paid gets added back to the loan. And your loan to value ratio, which is the loan amount, that your loan balance versus your market value of your home, that is called in the mortgage world the LTV ratio. The loan to value ratio is not the same as it was before you went into forbearance. So the terms of the refinance might change a little bit for you.
Yeah, and that makes sense, especially if they're all of a sudden you're going to have your loan amount's going to show higher, and perhaps in the last month people's values of their home has gone down, so it's going to skew those numbers again. So yeah, again, don't do it unless you really have to, and otherwise it is there for us to use, but unless it's an emergency. And then catch us up real quick, Maritza. Rate wise, have they, the past week or so, they've gone up a little? They've kind of been up and down a few times, right?
They were up a little on Monday. Tuesday, we had a great Fed meeting regarding monetary policy, and that gave a very confident sentiment in the market. So that translated basically into lower rates. 30-year rate today is at 2.75. It's below the 3% mark. Wow. And the 15-year rate is at 2.5.
Unbelievable. That's and we were amazed 10 days ago or 2 weeks ago when it was at 3. Now it's 2.75. I mean, it fluctuated a little, but now that's crazy low. So great time if a buyer can do it, is to look at all that, or somebody who's had a loan for a few years to look at the refi possibilities. And again, I will provide Maritza's information at the end, and thank you so much for the updated news. And one more question: what is Prosperity? Any difference in the FICO score number? I think it was 640 the last time we asked.
That is correct. We are back to the 640.
Mm-hmm.
During pandemic, we went up to 660, and now we're back to 640 across the board. Our down payment assistance programs are back. They were temporarily suspended during the pandemic, and now they're back in Florida and in Georgia as well.
Excellent, excellent. All right, that's the wrap up for today. She's Maritza Chiaway with Prosperity Mortgage. Always appreciate her input. Thanks again, and we'll talk soon, Maritza.
Thank you, Tom. Thank you for having me.
Of course, thank you.